is Tata Steel, because the numbers are a little bit subdued. But let's find out how you should approach the stock from here on. And JSPL as well yesterday, the stock was under pressure post its numbers. Amit Dixit joins us to help us out with just that. Hi, Amit. Good morning. Thanks so much for joining in. Well, I'll be having a chat with the management in a couple of hours. And I think later today, the analyst community as well will be speaking to the management. How do you read these numbers in terms of Tata Steel? Europe is clearly struggling. But on the India business, was it more or less in line with your estimates?
Yeah, hi. Good morning, Nigel. So Tata Steel numbers, if you look at it, they were a tad below our estimates. In fact, 3.5% lower in terms of EBITDA. As far as the standalone business is concerned, I believe the realization was in line with our estimates, but there was a little bit disappointment on cost front. So against the EBITDA that they delivered 14,500 odd, our estimate was 15,000. Now, in case of Europe, one has to see it with a lens of certain one-time expenses that were incurred in this quarter, particularly with respect to the relining expenses of the blast furnaces. So I think that could have been to the tune of 50 to 60 USD per ton. And if you adjust with that, then the numbers were, slightly lower than what they were last quarter. So I would say that numbers were a tad weak, but a bulk of it, I think Street had actually factored in, and that is what is getting reflected also in the stock reaction today.
Got it. Yeah, that's why, the stock isn't reacting very negatively. But what are you factoring in from here on? Because steel prices will move up a little bit. The problem is input cost as well has raised its ugly head, and coking coal cost will move up. So what are you factoring in terms of higher coking coal costs for the second half of this fiscal?
Yeah, so yesterday JSPL guided, for example, that they guided that the cost will be up by $40 to $50 per ton. In case of Tata Steel also, we would wait for their guidance. JSW has also guided a similar amount. So we are factoring in $40 to $50 per ton higher coking coal cost. Having said that, if you look at the steel prices, while they have been a tad weak in last 3 weeks or so because of festive season, but our channel checks indicate that in November, I mean, as we start, the steel prices post Diwali should go up again. Because imports in India are likely to be lower because of the delay in the BIS certification renewal for some of the key exporters. So I think that should help the prices. And do remember that this is going to be the seasonally very strong quarter. Consumption is still pretty good in India, growing by roughly 10%. So I don't see a lot of concerns. There would be a little bit of price cost effect here and there. But given the higher volumes, I believe the next quarter profitability, if you're talking about, should remain at a similar level as this quarter.
Okay, Amit, talking about steel price increases domestically is good post, this festive season. But the problem is that Chinese prices are now at a sharp discount in comparison to domestic prices. So throw some light on that. How much cheaper are Chinese prices right now? And, how do you see this panning out? As you're saying, because of that BIS, issue out there, imports are not coming in. But what if that gets sorted?
Yes, so imports are not coming in as of now. They are not being getting booked. So typically when imports are booked, it takes roughly 2 to 3 months for them to hit the shore. And some of these BIS certifications have not been renewed actually since April, May. And now what we saw, there was an influx of import in November. That was more because there were certain exporters from Vietnam whose BIS certifications were expiring in October. So they were more intent, in kind of sending more and more dispatches to India. Having said that, you touched upon Chinese steel prices. Yeah, so I feel that Chinese steel prices most likely have bottomed out at this level because, see, there is a typical range $500 to $700 where we have seen Chinese prices floating. And given the stimulus measures of the government, bulk of the impact will come in CY24 and directed towards infrastructure, mostly not residential infrastructure. It is this time. So we believe that given the Chinese guys are not making money, they are also making losses. European spreads are well below $200 per ton for last 4 weeks now. So I believe that this cost push will aid prices. And the similar thing we saw happening in 2020 as well. And similar thing we saw happening when coking coal prices went all the way up to $700. So there would be cost push. And I believe that prices should go up from here.
Okay, you've given us the entire setup, but who should be the hero now of this particular story? What's your big pick in there? I think JSPL was one of the stocks that you liked in the past, but as of now, given and taking everything, which are the top two stocks that you like?
No, so JSPL is still our topic in the space. And given the stock reaction yesterday, which I believe was a little bit extreme, given the fact that, in such kind of capex, you would typically see a little bit of delay here and there of such magnitude. And then the capex itself that has gone up to around 31,000 crores. I think that has got more to do with the change in scope. They are adding CRM, they are adding plate mill, so definitely capex has gone up. I believe that in case of JSPL, what people are not factoring in is the possible volume increase in FY25 due to HSM coming in Q3. And that gives them various options to increase volumes through different means, and we have covered it adequately in our note. So JSPL remains our topic. If you go in the entire gamut, then Shyam Metallics is one interesting stock that we would look at. And of course, followed by Tata Steel, because we believe that for Tata Steel, the worst looks to be over.
Okay, all right, Amit, appreciate you stopping by and filling us in with those details. You're sounding a little bit more optimistic than the voices that I've heard in the last 48 hours or so. And as you said, maybe the prices in China are bottoming out, which is good news. JSPL topic, Shyam Metallics is the other one you like in there, and maybe the worst for Tata Steel is in the price. Appreciate you joining in.